Anybody who comes in, I will admit them if I can remember to check. Otherwise, you all are the lucky ones. So, all right. I'm excited. Are you guys excited? Let me make sure. Okay, my camera's on. I'm unmuted. Awesome. And as you heard, I just started the recording, so it is going to be recorded. So it's going to be sent to everybody as a copy after, so that way you can refer back to this. But I'm so glad you guys are all here. And as you can see, I titled it Fire Your Landlord, 5 Ways to a Higher Credit Score. Because in 2025, we want everybody to fire their landlord who wants to fire their landlord. And I don't remember what it was Dwayne posted on Facebook earlier when he was advertising it, but that had me rolling. Um, if your landlord has you saying, "Oh Lord," that sent me. I was dying laughing. So we are going to make it fun and we're going to make it educational at the same time. So let's go ahead and jump into it. All right. So in the next hour, you guys are going to learn who we are, what the heck credit even is, why lenders look at your credit report, 5 ways to improve your credit. And we're going to do a little overview of everything we talked about, and we're going to have a Q&A at the end. Feel free to jump in though. Like if you have questions in the middle, it's totally fine. We're not going to jump through the screen and get on you about it. You can totally ask questions throughout. I want it to be interactive. So we will do the Q&A at the end though, if you do want to hold any questions till then. And who are Katie and Dwayne? So, Dwayne, if you want to go ahead and introduce yourself first, you can go ahead and take the floor.
I see some friends up here, but for those who don't know me, my name is Dwayne Jenkins. A lot of realtors and lenders affectionately refer to me as Financial Chocolate. The name of our company is Credit Kwon Do, where we Jackie Chan charge-offs, Bruce Lee late pays, and Kung Fu collections. So my background is completely by accident. I had jacked up credit. I had about a 600 FICO score if we added all three of them together. And what I did for a living then, I was a debt collector. I was a debt collector for one of the largest collection agencies in the country. My job was to call you and tell you that you're a schmuck for not paying your bills. In the meanwhile, your credit was probably higher than mine when I'm calling you a schmuck. So from there, my car caught on fire because it was just a coffin on wheels anyway. The only thing that worked was the check engine light. And this is before Uber, so I had to do something. And what I did was fix my credit, raised it 240 points in 5 months. And from there, I was convinced and convicted that not only credit is real, but I can actually switch careers and do something that I feel good about. So since then, we've been helping people get into houses. It's been over 10 years. We've had more closings than your local shopping mall. We're the best at what we do, and we're going to tell you about credit.
Oh my gosh. I really need to get my pitch to be as good as yours, but I just don't have that level of sense of humor. So I love it. You always make everything entertaining. But yeah, he is legit. I mean, to be in business doing this for over 10 years in and of itself. Yeah, Theoni said, "Yeah, Katie, we need to work on your pitch. That was good." Yeah, no joke. But I think that I always say like your credibility is in your longevity, and to be in the credit space for over 10 years as the CEO of your own company and helping other people, and like you said, having receipts to be able to show pictures of you with other people at the closing table, that speaks volumes. So just a little bit about me. I'm not going to be as entertaining, unfortunately, until me and Theoni can work on this, and Dwayne's going to have to, I'm going to have to pay him or something. But I've been a lender for almost 4.5 years now. I have been in the sales industry though for over 10 years. I actually started out in the automotive industry, and I remember having a conversation with the finance and insurance manager, asking her, what do I need to do to get my credit good enough to be able to buy a car? I worked at Toyota, and she's like, you need to go open 3 credit cards right now, and this is what you need to do. And she was trying to give me all this guidance. I was 18 years old, and not even a year and a half later, I was able to finance my own car without a cosigner. So my credit journey started really, really early on. But I'm a mom of one, and I'm actually am I 8 months pregnant now? Might be 8 months pregnant now. And I'm having a baby at the end of March. So I apologize if I get out of breath at any point during this. But I pretty much aim to be the big sister you never have when it comes to home buying. I can help you with pre approvals, all that good stuff. But credit is one of the biggest pillars of being able to buy a house. So that's a little bit about us. Let's see if this will change for me. There we go. Okay, so one of the first things I want to talk about is what is credit? So, what is credit? Credit means you've used somebody else's money to buy something. Basically, that's as simple as you can really put it. Credit cards use the bank's money to buy whatever you charge to that card. Loans are the bank's loaning money to you to buy something or obtain a service. Think student loans or a personal loan. A mortgage is borrowing the bank's money to buy a house. So, obviously, there's tons of different ways you can borrow money. Really just depends on what you're using it for, as to whether you're going to get approved for it or not. But borrowing money and paying it back on time as promised equals a great credit score. Borrowing money and not repaying on time equals a bad credit score and a bad history. So that's really the simplest way to put it. And if you think about it like this, if your best friend comes to you and asks for $500 and says, I promise you, I'll pay you $100 a month for the next 5 months until I pay you back, and they don't, you're not going to ever loan the money again, probably, right? Same thing if they go to your mom next and say, hey, I need another $500. Can you please loan it to me? I'll pay it back to you. You're probably going to tell your mom, hey, Jamie didn't pay me back my money. I didn't see a dollar of it back. So don't loan them money. So now you have bad credibility with everybody, and nobody's going to want to loan you money because you don't pay it back. So that's kind of the basics of that. And who actually tracks this, right? Who actually determines your credit score? The three credit reporting agencies are Experian, Equifax, and TransUnion. I'm sure you all have probably heard of them before. Shoot a little emoji reaction out if you've heard of them before. You might love them or hate them. I don't know. So you're going to have a different score with each one of these bureaus. They all kind of do it a little bit differently. Some things may report to TransUnion that don't report to Equifax. A true FICO score is closest to your real mortgage credit score. So lenders, when we go to pre-approve you for a home, same thing when you're getting a credit card or a personal loan or a car, the lender is going to pull all three credit bureaus. So they're going to determine what your scores are at all three of those places, because sometimes there can be major swings. Sometimes they're all just about the same, or within 10 to 15 points of each other, right? So we're going to determine your interest rate and what you qualify for off of your average score. So the middle score. If you're a 700, a 750, and an 800 score, we're going to use the 750 score. I love the emojis, guys. Thank you. So then we also are going to look at your actual history. So that's kind of two parts. That's a little bit of a high level inside look on how lenders really look at your credit is you have your score and then you have your history. Okay, so credit reports. Credit reports actually tell us if you make your payments on time, don't rack up too many monthly payments. They basically show whether or not you have irresponsible spending or not. And it will show us if you haven't repaid other people in the past. So lenders really need to see that you can afford to and be responsible enough to make smaller payments before they're going to think you're responsible enough to take on a 30-year mortgage payment, right? Because we all know a house is going to be the biggest investment we probably make in our entire lives. It's probably going to have the largest payment. If your car payment's higher than your mortgage, we got to have a conversation, and that won't be a fun one. But your mortgage should be the highest payment you take on your credit report, most likely. So lenders need to be able to see that you're responsible and that you repay it. So credit reports are going to air out all your dirty laundry. And look, we all make mistakes. A lot of us make mistakes when we're younger and don't understand how credit works. Like, we're not taught this in school. And if your parents or somebody close to you did not properly teach you, because everybody has their 2 cents on how you should handle credit, then of course, there may be a period of time where you make mistakes or times are hard or whatever. So we're basically here to, whether you have no credit, figure out how to establish it. You have bad credit, we need to fix it. We're going to try to help people with all of those aspects. So don't take on too much debt, make your payments on time. That's super important. And even if you have a really good credit score, you may not qualify for as much house as you think you should, because you've taken on too much debt. So there's a fine balance with this stuff. Okay, so what? Lenders look for minimum credit scores on credit reports, and ideally, they don't like to see more than 1 to 2 late payments in the last couple of years, but you don't need perfect credit. What do you guys think the minimum credit score requirements are, just in general? And if you're a lender, you're not allowed to say.
I'll stay
I'm gonna
quiet.
put it in the chat. You said you'll stay quiet. Yeah. So, Will, what do you think it is? Or somebody else? No. So, depending on the loan type, 620 preferred, he says. So that's definitely a good starting point. Can possibly go lower. That is true. So FHA loans will actually allow you to go down to a 500 credit score, but I do not recommend, like highly do not recommend. The reason being is a lot of lenders will flash, hey, we can do down to a 500 credit score, but that doesn't mean you're actually going to get an approval with that score, especially if you have a really bad history, like a lot of late payments and things. And they don't tell you that between 500 and 580 on a score, you need at least 10% down. And a lot of the times you might need like 40% down to actually get an approval with a score that low. And your interest rate is going to be horrific. So definitely don't recommend it. 620 and up is usually the recommendation because that opens up more loan programs for you with a less down payment. But in reality, your best chances of approval really start at least 640, ideally 680. So, and then down payment assistance programs too, just to kind of throw that out there. You need usually at least a 620 credit score, sometimes higher to qualify for down payment assistance. So if you're somebody who says, hey, my score is not great and I also need money to help me with my down payment, you're going to want to work on getting that score up. So my score is not that. Help. What do we do if your score is not 620, 640, 660, 680? What do we do? That's where Dwayne Jenkins is going to come in with Credit Kwon Do, and he's going to talk about 5 ways to improve your credit score. Now, obviously, there are so many ways, but he's got some tips here that he's going to go into. That way, we can start helping you guys get that score up.
All right, I'm excited to get into this. Before we do, just a word from our sponsor, Katie Bennett. Okay, if you guys are looking to buy a house and you're tired of running on a renter's hamster wheel, you can end it with Bennett. Call her now. Have your credit ran. Okay, boom. First tip that I have for you in your credit is knowing where you're at. Okay, houses are built above ground. So the first part of the process is getting your head out of the sand, right? You got to know where you're at. I want you to check your credit. Okay, that's going to give you the starting point. I used to go to the mall, I'd get lost, and I'd look for a spot that says, you are here. That's what we're going to do with your credit. We want to find out where you're beginning so we can get you mapped out to your goal. Okay. And this is how you measure progress. Okay. And that's going to be a word that you hear throughout these tips. Okay. So now, once you know where your credit's at, that's a snapshot in time. Okay. You need to monitor your credit. Unfortunately, over 80% of credit reports have some sort of error. Okay. Whether that's a typo or something worse, or even an account that doesn't belong to you. So you need to monitor your credit. Okay. I do recommend 2 apps for that. We actually use a lot of credit apps for different purposes. Some of them are paid, some of them are free, but I got a free one for you. That's going to be Credit Karma. I'm sure that a lot of you have heard that. I'm sure a lot of you already have it. Okay. Credit Karma is great for monitoring what's on Equifax and TransUnion. Okay. One note about Credit Karma is that you just want to use it to see what's on your credit report. You don't necessarily want to pay attention to the score. So when Katie was talking about 580, 620, 640, she's talking about a completely different thing. More on that in a minute. Now, if Credit Karma covers 2 bureaus and you have 3, that third one, ta-da, is Experian, and you want to go ahead and download the Experian app. They will try to get some money out of you, but I am here to tell you that the free version is more than plenty. And if you combine it with Credit Karma, you've got all three monitored, and you are on the lookout for anything that can happen that affects you. Okay. Now, I do want to say this, again, I can't emphasize this enough. If you want to get a house sooner than later, you should be starting now with a lender like Katie, pulling your credit. Okay. You do have different credit scores, and Katie is going to have access to the score that's going to determine where you're at as far as getting a house. You actually have different credit scores. Okay. The number that she uses is a mortgage FICO score. I don't want to geek out on you right now. We'll take baby steps, but I can tell you that this score is 100% different than Credit Karma, and it's even different than the FICO scores that you get from your bank, right? So if your bank tells you you're at a 640, that doesn't mean you're at the same 640 that Bennett needs to get you done. Okay. Any questions on that so far? Well, you're usually inquisitive. I know you have a question about the getting started. Okay, well, just save it to the end. Number two, trusting the right. Dang it, Will. I'm going to circle back to that question. I already started my next point. All right. But good question, though. Is it typically lower? You know what, Will? I love you to death. I'll go ahead and answer this now. Will Fiddle. Fidel, excuse me, has a question, and is it typically lower? Is the credit score typically lower? It really depends. That's actually a really good question. What happens, and I'll speak for Theone and Katie, just blink twice if I'm wrong, but typically people will come to you, they'll say, hey, I'm at a 700, I'm ready to buy a house. And then you run that FICO report, and you see that that 700 on their end is a 580 on your end, and then they think like you don't know what you're talking about, right? So yeah, it can be lower significantly, and that's when it causes problems, right? So good question, Will. Hope that answered it, right? All right. Moving on to point two, trusting the right sources. Okay, when it comes to credit, if you ask 10 different people, you will get 10 different answers. I mean, you've had bad credit for a minute now, and all of a sudden now you're trying to do something about it. Your cousin, your uncle, your coworker, they all got these credit tips, man. And then the algorithm picks it up, and now you're being shown all these ads on TikTok and Instagram, and everybody's got these weird tips for you. Okay. And all these shortcuts. And I'll tell you what, some of these shortcuts from the wrong sources will be the longest detour you ever take in your credit life, right? So make sure that you're dealing with the right sources, people that you could trust. I know a credit guy, probably be a good resource for you. I know a couple of lenders too. They happen to be right here in this Zoom with us. Okay. So think about the people that are with you from the beginning. They're the ones that want to set you up for success during that journey, that narrow road to get to home ownership. You're going to see things that sound very tempting. Somebody's going to come out of the woodworks and they're going to say, oh, you don't have to do it. They say, do what I say. Those are typically people that may have their own interests before yours. Just remember your A1s from day ones, right? And stick to the folks that are here to give you answers you can rely on, okay? Um, a good litmus test is, do the people you are being asked to trust, do they have receipts? Do they have reviews? Do they have good credit? Do they follow their own advice? You know, I was approached the other day. I was at a red light, and somebody rolled up with in their vehicle, looked like a free candy van, and they were offering to detail mine. Well, they didn't look like they were practicing what they preach. So again, I declined on that. Make sure that the people that you are dealing with are practicing what they preach. They should look like the finish line you're trying to get to. Okay. Um, so, yes, once we have you doing number two, trusting the right sources, we want to make sure you are trusting the process. The reason why the people in number two are the ones you should trust is because they have mapped out this process for hundreds of people, dozens of families before you came along. They are tried and true, and they have the experience. And you have to trust what they're saying to get to where you want to be. Now, speaking specifically about credit, It's so important that you get advice that's pertaining to your situation, not someone else's. Two people can have the same credit score, but the reasons why can be completely different. So if you could imagine New York City on a map, and two people are trying to get to New York City, but one of them is coming from California and the other one is coming from North Carolina. Even though they have the same destination, the way to get there is going to be completely different. And if you can leave with one thing tonight, remember that your credit score is a fingerprint to you. So if someone else says, oh, well, you just need to get a credit card, actually getting a credit card might take your score down even further because you've already got enough new accounts, right? So again, trust the process that's laid out by the sources that you should be trusting, okay? And you just need to be patient, right? You know, I would think that that's the biggest thing in our microwave society. We're used to getting everything instant. You know, Amazon 3 day Prime used to be enough for me. Now I need the same thing in one day. I don't know why I need it in one day. It's just going to sit unopened in the corner anyway for 3 days. But that's what we've been trained to do. We've been trained to want everything yesterday. And when it comes to fixing your credit and when it comes to getting back on financial track, these are things that can't happen overnight, right? So just understand that you deserve the patience to invest in where you want to be, okay? And just ask yourself, look around, there's houses everywhere, okay? How many houses do you drive past on the way to work? Okay, have you ever counted them? Tomorrow, do this. Take the long way home from work, cut through a neighborhood, and count the houses. And you can't tell me that the dozens of houses that you see all the way around you, that those families deserve something, or they're special, or they have something that you don't have, okay? Or their kids deserve to have a backyard that your kids don't have, okay? So again, be patient because you deserve the patience invested in yourself to get to where you need to be. Your future and your destiny is coming, but we've got to get you on the path, and you got to be willing to stay on it, right? Okay. I can't harp on this enough. We've helped a lot of people, but not all of our stories have been success stories. And when they go sideways, it's typically because somebody's lost patience to invest in their own journey. You know, some of my favorite meals are so slow cooked because you can't microwave everything to the finish line. Okay. And if you get off the path for what feels good in the moment, you're going to miss out on big moments like hosting Thanksgiving dinner at your house, having your first Christmas tree on your property, or that summertime cookout, right? So stay on your path, trust the process, okay? And moving right along, okay? Um, we want you to be proactive, right? We want you to get ahead of any issues that are coming up. We want you to start anticipating what's going to happen. So that means communicating. And, you know, when it comes to credit, it can be difficult to communicate because people can feel a lot of shame when it comes to having a credit issue. They can be embarrassing. That's why I'm so upfront with my credit challenges that I had because I want you to know that if I could get to where I needed to be, you certainly can. Okay. Some of the downfalls or the pitfalls that I see people get sidetracked by is not communicating. Okay. So once we get you on this journey, okay, we're the right sources because you should be bringing your questions to us. Okay. And it's little things. I've seen people be embarrassed because maybe they have more bills this pay period than they had paycheck, right? But then if you communicated that, we could tell you that, hey, you know, your issues don't start on the credit report until they're 30 days late, right? Now, it's never a good idea to pay late, but sometimes life be lifing, right? So you have to understand how credit reporting works. I have seen so many people go late on a bill and they say, well, I'll just double up next month. I'm already late. No, you're 17 days late. Even though the bank's been calling, texting you, you got a late fee. No one else knows it but you and that lender, right? You can actually make that payment on time and protect your payment history. So it's knowing things like that, right? I've seen people go late on installment loans. Well, typically, if there's a security attached, like an auto loan has a car attached to it, you can communicate with your bank, and a lot of times they will let you skip a payment if you have a challenge come up, right? So it's knowing these things that can make the biggest difference because a late payment will usually stay on your credit report for up to 7 years. And we don't want such a big consequence from such a small preventable issue, right? Um, Not applying for anything is part of being patient, right? So I can illustrate to you how one inquiry can affect 65% of your credit history. So, for instance, you go into Kohl's and the girl's nice. So they say, hey, why don't you apply for a credit card with us and save 10%? Well, first of all, right, you're buying a pack of socks. I'll give you 10% of that to not apply, right? But once you do apply, 10% of your credit score is affected by applications, right? Another 10% of your credit score is affected by the credit mix. That means the different types of accounts that you have going on at the same time. You could have the perfect mix of accounts and you could throw that off if you get a new account. Okay. Length of credit history is 15%. You could shorten your credit history with a new account. And Kohl's didn't give you a card on the spot to be nice. They want you to turn around, get out of line, go back in the store, and use it. And when you do that, you affect the amounts owed on your credit, which is 30%. So when you affect all four of those categories, that's 65% of your credit. I mean, that means that if this was a test back when I was in school, the best I could do at this test is a 35. I got an F, right? So you don't want to get an F on your credit journey because you want to get a house, right? So being proactive is everything. And one more thing about inquiries, I'm really referring to unplanned inquiries. Again, going back to number two, trusting the right sources and trusting the process. At any given time, I may ask a client to apply for something, but that is a strategic application. Katie may need to run your credit. Those are strategic applications. We have already factored in the risk versus reward, and we feel like it's in your best interest. That is different than going to the mall and applying for a Best Buy card because you want a TV for the Super Bowl. Shame on you. You haven't gotten a house yet to put the TV in. We want you to get all these things, but we want you to get them in a certain order, right? And five, we touched on this in the beginning, but I want to go into a little more detail about Vantage versus FICO. So when you log into that Credit Karma app and you look in between the numbers, it will say calculated using Vantage Score 3.0. At this time, no lender that I'm aware of, okay, is using Vantage Score 3.0. Okay, lenders use FICO scores. That's FICO, right? So when you're trying to get into the mother FICO house, see what I did there? Okay. Katie is going to run your credit report and she's looking for your FICO score. Now, you might be saying, hey, I get my FICO score from my bank, from my credit card, from my app. And you know what? Um, I'm going to tell you that that's not the right score that's going to get you from renting to owning, right? Because you actually have 43 different consumer FICO scores, 43 of them things. Do you hear what I'm telling you, my friend? And the three that you need are the FICO 5, FICO 4, FICO 2, and those are only going to come from the big homie right here, KB, right? So make sure that you are understanding the difference between FICO scores and Vantage scores, and understand that you have multiple FICO scores, and understand that they all serve different purposes, right? So those are the 5 tips that I see that can either accelerate you or they can decelerate you. They can be weaponized against you or for you. We want you to take these and create a baseline to go up from here.
Sorry, I totally didn't mean to change the slide on you there, by the way.
It's all good. It's all good.
And I just want to jump in on this one really quick. I put at the bottom of the slide, um, like he was saying, you have different FICO scores and different algorithms. They have a bunch of different Vantage scores and all credit wise scores. And I've seen so many of them. Depending on who you're applying for credit with, your score is going to be different. So I've had people even come to me and say, "Hey, well, I just bought a car and they told me my score was a 720." And, granted, buying a car is going to probably bring your score down at least temporarily in the beginning. And if they sent your credit to 20 different banks, then it'll probably hurt you a lot more. So don't ever let an automaker do that or a bank do that when you're trying to get auto financing. But um, then they come to me and they're like, "What? Well, why, when you pulled the score, is it showing as a 690 when I just had it checked and it was a 720 at the dealership? Or I just got a student loan and they said my score is a 750." I mean, there were times where, for me personally, I had applied for an American Express card. They said my score was a 750. And when I went to get a car, it said that I was a 680. You know what I mean? So you're never going to see the same score depending on who pulls it, and everybody uses a different algorithm. And the best way to know where you stand is just to apply with a lender, honestly, like, especially if they do a soft pull. Because we, for example, at least can do a soft pull where it checks all three credit bureaus and it does not count as an inquiry. We can actually issue pre-approvals off of soft pulls on most products. So that's something that's a big benefit, and you want to definitely consider that. Especially in this market where people are taking a few months sometimes to find a house. You don't want your score getting dinged multiple times. Again, not that inquiries affect your score the most of all things, but if you can avoid them, then that's, what you're going to want to do and what I would recommend. So even if you're just in the beginning stages and you're like, "Hey, I don't know exactly where I stand, but I'm definitely trying to buy a house this year. I don't know if I'm really far away, if I'm close, or if I'm already there." I've had people think that they're far away and they actually qualify. So that's the other thing to take into consideration. So just having a mortgage professional check it for you is honestly going to be the most accurate thing that you can do. Let's see. My slides hate me today. And so I want to just do a little bit of a recap here. Credit means you use someone else's money to buy something. If you paid them back as agreed, that will build your reputation, aka your credit score. Experian, Equifax, and TransUnion are the big three reporting agencies that you need to care about. Lenders need to see that you've paid small things on time so they know you can pay big things on time. Mortgage scores are different than Credit Karma scores, and don't listen to bad advice because you're impatient. When I also talk about paying small things, I get two sides of the coin from people where they're like, "Oh, well, it was just a $25 payment I missed one time. Like, it wasn't that much." And I'm like, "Exactly. It wasn't that much." And so the bank's saying, "Oh, they couldn't pay $25 for a minimum payment. How are they going to pay $2,000 for a mortgage?" So it may seem like it's not that big of a deal to you, but if it's that simple, just pay it, because it looks worse to not pay it because it is so simple. So just keep that in mind. You want to show a good track record of being able to pay little things on time consistently to be able to take on a 30-year mortgage.
Absolutely.
And Q&A. So I'm opening the floor if anybody has any questions, whether you're a lender or not. You can ask questions to Dwayne, to me, whatever you'd like. We'll answer any of your questions. And if you have any personal situations you want to discuss or have your credit report reviewed by an expert, just DM us Credit Chat and we can set up a time to chat with you individually.
Here's one question. Are there any changes coming up in the VA program for VA home loans?
Pertaining to anything in specific?
Nothing off the top of my mind. It's been several years since I've been involved in the residential side of the mortgage business. But me being a vet too, I do have a lot of people that are still connected with that are also veterans as well. Always trying to hit up, trying to get as much accurate information with using the VA program before they go out there and start shopping around.
Right. So we do get bulletins, like if there's any updates that are coming, any changes that are going to happen with any of the loan types. Certain guidelines over time can kind of just change, and we're alerted when that happens. I don't personally know of any specific changes that are coming up. They just announced, the increase of the loan limits for VA loans and things like that. But in terms of any massive changes, there's nothing that I personally know that are coming change wise.
Okay. What were the limits increased to?
806,500.
Oh, nice. Okay.
Yep. And then you've got your high cost areas, which maximize it even higher than that. So that will,
Oh, yeah.
that'll vary depending on the high cost area.
With some of them though, they also qualify for being exempt from paying property taxes too, based on their disability status. So that could be a
Yes.
good for them as well.
Yes, and typically up front, we have to, I know like we just talked about with our construction product for VA, if we can show that they're exempt, we don't have to calculate that into the financing part of it. But for existing homes, we have to assume the worst case scenario, so it'll be charged up front for escrows. But then once they file the exemption with the county and it's actually approved, then they'll be refunded back any of that money that they've already paid to the county.
Okay, so basically they just need to submit their document that what the VA issued them at and whatnot.
Exactly, because technically the lender doesn't determine, their eligibility for the taxes to be zero. The county has to do that directly. So they basically have to just go back, file that exemption with the county, and then the county will approve it and issue any refunds for any money that they've paid that they shouldn't have when they went to
And
closing,
they'll,
for example.
and they'll take care of all the amendments and everything through the lender then for them.
Yep. And then and we personally service our own loans. So they'll just basically let the servicer know, like, hey, we don't need to collect the taxes. The escrow will be adjusted going forward.
All right, that's good.
And then does medical debt impact your credit score? Dwayne.
Oh man, that's a great question. Theoni had a question too. I'll circle back
I
to
just
that.
saw that one.
Yeah. But the medical debt cut. So yeah. So from the CFPB, it has been passed that medical debt will no longer appear on credit reports, and that should be coming up shortly. Um, so my take on that is this. I would not hold my breath for that to actually pass. That was something that came to pass under the previous administration. This new administration has some opinions about the CFPB, and if they act on said opinions, we don't know what type of rulings would survive that they put out. I would also say that that medical debt ruling has already been hit with a couple of lawsuits from some major entities that are in favor of medical debt staying there. So that's a wait and see. What would I do if I had medical debt right now? I would make sure I paid it. I would make sure I entered a payment arrangement with the service provider. I would make sure that's documented. Even if they said no, I would document when I attempted to make a payment arrangement with the service provider, right? Because here's what I think is going to happen. Okay. I think that let's say this law stands, which I'm not confident it will, but let's just say it's upheld. These companies are not going to let billions of dollars just slip through the cracks. So then what's going to happen? Okay. I think that folks are going to be taken to court and for micro judgments in their absence. A lot of times you are served at an address that you don't live at anymore. You're found liable in your absence. You didn't even know you had a court date. And those things could come up in closings, or at a pretty unfavorable time. So please make a payment arrangement. I think that that's my biggest fear of it is that people may take the urgency off of taking care of their debt medically if they think it's not on the credit report, right? So make a payment arrangement, please, because they're going to come for their money one way or another. Yeah.
And does it impact your score when medical debt is reporting?
Yes, it can. It certainly can. I remember when paid medical debt was still on the credit report. Now, what came out from the CFPB before this latest ruling is that anything that was paid would be removed from the credit report, and anything that was under $600 would not be on the credit report. And that helped a lot of people boost their scores. But again, I don't want to go down the rabbit hole with this. I could geek out on credit topics, but I just think that if they're not going to be on your credit report, they're going to come back to haunt you in one way or another. So just understand that there's still a priority, even if they're not affecting your FICO score.
And from a mortgage perspective, aside from it impacting your score if it is reporting, it does not count against you when we run it through the automated system to try to get an approval. So, for example, if you had 3 medical collections on your credit report, that basically doesn't exist in the eyes of the lenders. But if you had 3 collections because you didn't pay 3 credit cards, now that's going to count against you. So that is one difference as well with medical debt. And then Theoni asked, where can I get a free copy of my credit? I guess we can talk about getting a free copy of your credit score and free copy of your credit report, because I know sometimes there's a difference.
Well, if you're monitoring your credit, between Credit Karma and Experian, you will be able to see your report through those apps. If you want a copy of your credit report, you can go to annualcreditreport.com. Okay, make sure you spell that correctly. A misspelling could take you somewhere else, right? But the beautiful thing about annualcreditreport.com is that you can actually use it weekly. Right. So you could literally go to this website and use it weekly and get all 3 of your reports once a week. The caveat is that you need to be ready to print or save the report when you do it, because you won't be able to log in and go back to it. Great question.
And then in terms of getting another free copy, I guess, of your actual score is if you're actually interested in buying a house and you want to know where your scores stand, we can do a soft pull and let you know what those 3 scores are. Otherwise, where I have sent people in the past, if they're not quite ready to, do an actual pre-approval, because let's be real, we're not a credit reporting agency, so we're not just here to give people's credit reports out. You can check your true FICO score. If you go to Experian, TransUnion, Equifax directly, typically those scores that they show you are going to be the closest to the mortgage score when we actually pull it. Anybody else have any other questions?
Are you using like a desktop underwriter or whatnot for your process when you're vetting people?
Yes. Yep. We have to use either LP or DU. Those are our AUS, our automated underwriting systems. The desktop underwriters through Fannie Mae, and LP is through Freddie Mac. Sorry. So we basically will do the pre-approval up front as the loan officer, and then we'll submit it through the AUS to get that approved or accept an eligible response. So that's kind of how we're able to also determine what somebody's maximum DTI can be, or their max sales price is. Sometimes, especially if the score is not, an 800, and we're trying to push above the standard debt to income ratios, we submit it through the AUS and it'll tell us yep, you're good to go that high, or nope, that's too high. So we adjust it back down and then try a lower amount. We definitely use it for all of our files.
Okay.
Anybody else got a credit question or a credit repair question? And in the chat, Katie's team also has the ability to get files fully credit approved before you find a house. Yes, we TBD the files, which basically means it doesn't have an address yet. It's to be determined, but we can submit their assets, their credit, their income, everything in advance to basically have an underwriter give that pre-approval with the conditions up front, so you can go to closing a whole lot faster. And that the loan officer didn't screw up. So in that way, you also know kind of in advance what your conditions are going to be. So it just makes your offer stronger as well in the eyes of the seller, because you're basically already approved with an underwriter with your conditions listed. So that's definitely a big benefit. I'm trying to think of anything else. Go ahead.
How long are the term sheets good for?
How long are the like the underwritten pre-approvals or just a regular pre-approval?
Well, yeah, with the underwritten pre-approvals, how long are they good for?
So pretty much we say 90 days. But of course, if anything changes, then that makes it, void. We would have to have them review it again. Like, let's say you did go buy a car or whatever in those 90 days, or you changed your job.
Like, all right, so kind of like an appraisal, you just get an extension.
Yeah, I mean, they would just resubmit whatever we need to resubmit to them, and they can re-review it and say if there's any new conditions and that the approval still stands.
Okay.
Does anybody have anything on like credit repair companies, like anything you've heard about credit repair or credit repair companies or anything of that nature? Because that's Dwayne's specialty. So while we've got his precious time, if there's anything you guys want on that, and then again, if you
I
have anything specific,
know most of them are fraudulent
you said most of them are fraudulent, Dwayne.
that I come across have been fraudulent. They're not compliant with what they're supposed to represent, or don't have the capabilities.
Right. Dwayne is the compliance king. He's probably ready to go on a rant.
Well, I can't disagree with that, Jimmy. That's very true. That's why we try to show up well, for our clients. Uh, the person getting credit help is not our only client. Our client is also the referral partner. We're pretty popular in the real estate community. We have a lot of agents, brokerages, and lenders who rely on us. So yeah, we have to be compliant because it's several people's reputations on the line when we're all working together, and we're working together as a team. And some of the compliances are frustrating. So for instance, I'm in Virginia. We can service people outside of Virginia, but we cannot call people or speak to them until after they sign up. If they come to us out of state, we have to do all communications online. I mean, that's pretty frustrating, but we are going to follow that, right? Unfortunately, we deal with competitors that don't follow those things, so that can be frustrating. In Georgia, you go to Instagram right now and type in Georgia credit repair and see all kinds of people, practicing credit repair. You'll see agents partnering up with credit repair experts in Atlanta and stuff like that. That's completely illegal. You actually have to be an attorney in the state of Georgia to practice credit repair. So if you see anybody doing it that's not a law firm, it is completely illegal, by the way. So it's just little things like that that make it difficult to compete. When you are the clean player on the field and everybody else is roided up, I mean, it makes it difficult to, compete with them. But we fight the good fight, and I think that's why we've been in it for the long haul. We see a lot of unscrupulous ads out here. We see fake doctored credit reports, next to a fake after credit report, and people saying that you can get your credit report fixed overnight. That's why most of our social proof is at closing tables, because you can't fake being at a closing table, with a lender, at an attorney's office, with the buyers, with the agents. And we've got countless pictures at closing tables. I don't even think half these other people even have clients get that far in the process to actually buy a house. So, yeah. I will share a quick story. That was the wrong question to ask me, man. I'll go on a rant on this one, but I'll say this and I'll wrap it up. We did have a story. I did have a client that didn't get the results that we wanted. In fact, full transparency, I worked on the credit for about 6 months and we hardly saw anything budge. It was extremely frustrating. And she canceled the service. She came back maybe 4 or 5 months later. 4 or 5 months later, everybody in here knows what it takes to find and buy a house, right? So four months later, she comes back and she says, "Hey, I've got all this stuff on my credit report. I'm being sued and I'm being contacted by all of these companies." So I look at her credit report again, and she's got this description under every account, even her positive accounts, that say legal action taken. I've never seen anything like that before. But here's what she also had, a mortgage on her credit report. Now, I couldn't make anything move on her credit. Now she has a mortgage on her credit report. And I'm like, man, in less than 4 months, you got approved, got your credit fixed, got approved for a mortgage, and found a house, and all these people are suing you. That's what it looks like when you file identity theft illegally, right? So she filed identity theft. She used a fake social security number, which is also known as a CPN number. You'll see that advertised on social media, and folks are literally charging you money to get you to use a child's SSN or a deceased person's SSN. And when you do those things, it's going to be you that are going to have to answer to the feds. It's going to be you sitting in that cell next to Diddy. And they're not going to be trying to hear, "Oh, I use Boo Boo's credit repair service." That's going to be you. So, again, go back to point two, make sure you're getting advice from the right sources. I'm off my soapbox now.
And Rosary, you said how much will that cost a borrower? Are you referring to us doing the upfront pre-approval, or are you referring to actual credit repair services? Just so that I can make sure we answer your question. And you can talk if you want. Credit repair services. So she's curious, Dwayne, what the cost of credit repair services to a client is with you and your company. And then Theoni also asked, what do I look for in scams with credit repair
Okay.
companies?
Okay, perfect. So, depending on what's going on with somebody's credit, that's going to factor into how much they end up paying. I like to compare our company to an auto body shop. Some people bring their car in, they got a little bit of curb rub on the rim. Some people then damn flip that thing and then rolled over, and they're just going to be in the program a little bit longer, right? So, the damage on the credit report typically will determine how much you cost. We charge a flat monthly fee, and there's a price range for it. And once we assess a credit report, we'll give somebody a quote. It could be anywhere from 124.95 a month. It could be upwards to 199.95 per month. And one thing I want to say about that is that we will see people online advertising $30 and we'll have your credit fixed in 14 days and these unusually low prices. And if it sounds too good to be true, it usually is. We've seen companies that will just work on a small fraction of your issues, charge you a monthly fee, and stretch out the process as long as possible, right? There's so many, we could do a whole separate Zoom on what's wrong with that approach. But our method is this. We want to get somebody in our program, charge them a fair rate, and work as fast as we possibly can. We have been successful doing everything we can as fast as we can and getting the results that will have the client sending people to us, the lender referring other people to us, and the agent referring other people to us. So we are long-term greedy in the sense that we want to be done with our client as fast as possible because we know they're going to refer somebody else to us, and that person will be signing up for services. So yeah,
What
if
are
that makes
two things to look out for with like it being a scam, most likely?
There are certain terms like credit sweep, full credit sweep, certain terms like CPN numbers, certain approaches like results that are too good to be true, promising results or turnaround times, right? So we have state laws you have to follow and federal laws you have to follow. And one clear thing is that we cannot guarantee any outcome, result, or time frame. We literally have to disclose that to a customer, right? And when people are promising things will be done in 30 days or less, guaranteed, that's going to be one of the biggest red flags. Charging money up front in advance of services. That's going to be another red flag. If you sign an agreement today, we cannot take money for 5 days, depending on the state that they're in. We have some companies that are out there and they are charging $1,500, $500, $2,000 on day one, right? So charging money in advance, guaranteeing results, and advertising results that are too good to be true are probably the biggest red flags. And then also, aside, when you see in an Instagram video and they're standing inside a helicopter or an airplane and it's obviously not moving, or they're standing in front of a Lamborghini, or they have a Mr. T amount of gold in their mouth and around their necks, that's probably a red flag that maybe this is not the service that you want to go to.
Awesome. And I'm about to wrap this up since we're at 8:30, but I wanted to kind of speak to one other thing with that is literally there are gurus out there teaching other people how to repair credit from your home when you're a solo person who doesn't know what they're doing, and they sell a course on how to dispute things and how to do this and how to build a business. And they even have a Facebook group called like Credit Repair Cloud or something like that, where literally Joe Blow, your neighbor who's never held down a job a day in their life and has a 400 credit score, could literally be out here on Facebook advertising credit repair services. And these days with Canva and everything, you never know. They could be making themselves look super professional, doctoring reviews. So you have to be very careful. Like he said, those really weird companies that advertise this stuff online with $30 or whatever. And I've heard people end up in deeper, what, because they get in bed with a credit repair person who doesn't know what they're doing, and they actually end up getting sued. So, not by the credit repair person, sued by the creditors. So you want to work with somebody who knows what they're actually doing. So yes, but
Basically, look, if it ain't financial chocolate, you need to stop it. That's what we're saying tonight.
exactly. So,
Couple
yeah,
couple
well,
quick questions.
thanks. Yeah, go ahead.
One, depending on some people and some circumstances, can they pay down maybe some points onto what they're looking at getting into to keep the rate somewhat moderate? And also, do you still recommend people if they're assuming they're capable of it to maybe pay their mortgages bi-weekly instead of once a month?
Yeah, so points can definitely be bought down, and we kind of have a little bit of a method to determine like what makes sense. Like the more you start to buy it down, the more outrageously expensive it gets because the investors want you to have a higher rate because they make more money that way. So if somebody could buy down to a 5% interest rate or a 4.5, but it's probably going to cost you like $80,000. And then there's limits to how many points you can actually pay. So that's a consideration, but there is a sweet spot for it. And then your second question, what was it again? I'm sorry, mom brain, pregnancy brain.
Depending on the situation, if they're capable of it, I mean, would you recommend them making bi-weekly
Yes.
payments on instead of monthly?
Yes, any extra payments that you can make in reality, even if it's $100 a month or $100 every couple months, there's calculators online that you can go and look at to see how much interest it shaves off. But it really does compound and make a huge difference. And if you make biweekly payments, depending on the size of your actual mortgage, you could shave off between like 4 and 7 years just by doing biweekly payments.
That's what I was kind of curious. I mean, I know because it's so heavily amortized up front, a lot of people don't realize the difference between amortized and simple base interest rates. That if they just pay down on that principal just a little bit at a time, because so much goes towards that interest and taxes,
Yes,
they can.
especially up front. It's very interest heavy up front. So the sooner you can start paying towards principal, the better. If you get a good tax return and have nothing else to use it for, and you don't want to invest it somewhere else, that alone could save you thousands of dollars in the long run.
Dwayne, can you put your contact info up also? Because I did have clients in the past that was looking for flip properties and whatnot, and they were off on their FICO by 5 points and whatnot, and they couldn't get a loan from even hard money.
Gotcha. Sure will. I'll put it in the chat. No problem.
All right,
Thanks.
everybody. Has anybody else got any final questions before we wrap up here? This was a good session. All right. Well, again, like I said, if you have any personal situation questions, feel free to reach out to Dwayne or I via the DMs. You can shoot us a message saying credit chat, and we'll know that you're referring to this call and that you were on this call, and we can talk to you about any personal situations, and we'll get this recording out to you. But thanks for being here, and we'll see you the next time.
Thanks, guys.
Thank you.